Hello and welcome back to the Japan Stock Podcast. Or, for our listeners in Tokyo, Nihon Kabu Ippondo.
It's great to be here.
It's Friday, February 6th, 2026. I'm your host, and today we're doing a deep dive into a company that really lives and breathes the idea. If you can't measure it, you can't make it.
It sounds so simple, right? Almost like a fortune cookie. But when you're working with nanometers, it's everything. It's the absolute law.
We are breaking down Tokyo Seimitsu, ticker 7729, though you probably know them better by their brand name, ACCRETECH.
Right, ACCRETECH.
And this isn't just another manufacturing story. This company is attempting a kind of high-wire act. They're straddling two massive and, frankly, pretty volatile worlds.
You've got semiconductor production equipment, SPE, as we call it, and then you have precision metrology, the measuring side.
And usually as an investor, you have to pick one or the other. You either ride the crazy chip cycle or you pick the steady industrial measurement company.
Exactly. But Tokyo Seimitsu makes you buy both. And that's where all the interesting tension is.
It is. And we have fresh data to dig into from their Q3 results, which just came out yesterday, February 5th. But before we get to the numbers, we have to talk about this evolution the company is going through.
It's a huge pivot. They're moving from the internal combustion engine era straight into the AI and EV era.
You called it a species change earlier, and I think that's the perfect term for it.
It really is. It's a survival story as much as it's a growth story.
So let's start at the foundation. Tell us a bit about where they came from.
Okay, so they started back in 1949, Tokyo Seimitsu Tools. They listed on the TSE in 62. But the year that the year that set the stage for everything we're talking about today was 1964.
And what happened in 1964?
That's when they developed Japan's very first wafer probing machine.
Okay, let's pause right there. Wafer prober. We're going to be saying that a lot.
Uh-huh.
For anyone listening who isn't a chip engineer, what exactly is this machine doing?
Right. So think of a big silicon wafer like a pizza that you've scored into, say, hundreds of tiny little squares. Those are the chips.
But you haven't actually sliced the pizza yet.
Exactly. It's still one solid disc. A wafer prober comes in with these microscopic little needles, and it touches down on every single one of those squares to see if the electronics work.
So it's basically quality control before you waste money packaging a bad chip.
That's it. If a chip is dead on the wafer, you mark it and throw it out later. Simple as that.
Okay, so that's the making side of the business.
Yeah.
But they have this whole other personality, the metrology side.
That's their legacy business. Things like coordinate measuring machines, CMMs. These are big machines that will physically touch, say, a car engine block and map out its geometry down to the micron.
One arm making chips, the other measuring car parts. They claim these two worlds feed each other, right?
That's their whole brand, ACCRETECH. Accrete and technology matched together. The theory is that the precision needed to measure an engine helps them build a better chip machine and vice versa.
It's a good story.
Yeah.
But, before we get too deep into the perfect synergy narrative, we have to talk about the governance issue. There was that incident back in 2021.
Ah, yes. The Tosei engineering scandal.
It was messy, especially for a company that sells precision as its main product.
It really was a classic breakdown of internal controls. The president of that subsidiary, Tosei Engineering, was caught taking kickbacks.
And it wasn't a small amount of money.
No, about 120 million yen over a decade. And on top of that, there was some creative accounting.
Right, improper booking.
Yeah, they were hiding bad debts, basically, using a Chinese subsidiary to make it look like they were going to get paid on sales that were already dead.
So as an analyst, when I hear that, it just screams managerial weakness. That was 5 years ago. Why does it still matter now in 2026?
Because it explains their behavior today. That scandal was a wake-up call for the main company. It forced them to completely overhaul their governance.
So they basically cleaned house.
They tightened every screw. They're a much more disciplined company now. And they needed that discipline for the massive market shift they're navigating.
Okay, let's get into that shift. We talked about the death of the engine. In the old days, they just rode the Made in Japan wave.
Oh, absolutely. The 50s through the 80s, that was their golden era. If you were building a car or an appliance in Japan, you were probably using their tools.
But then came the 2000s, the silicon shift.
Right. They went hard into semiconductors.
Right.
And if you fast forward to just the last couple of years, say fiscal 24 and 25, it was a mixed bag.
Well, the bottom fell out of consumer electronics, right?
Yeah.
Smartphones, PCs, everything just stopped.
Exactly. But while that was happening, Tokyo Seimitsu was positioning itself for two very specific markets, generative AI and green energy.
And the data that just dropped yesterday for Q3 suggests that bet is starting to pay off.
It really is. The headline was a huge surge in orders for those wafer probers we were talking about.
And that surge is being driven by one thing, one acronym.
HBM, high bandwidth memory.
It's everywhere, the memory chips that get paired with NVIDIA GPUs. But why does HBM need a better prober than normal memory?
So this is the key. HBM isn't a flat chip, it's a stack. It's like a skyscraper of, say, 8 or 12 layers of silicon all connected together.
Through those tiny little vertical holes, the TSVs.
Correct. And you can't wait until the skyscraper is finished to see if the wiring on the 5th floor works. If you stack 8 chips and number 4 is dead, you have to throw the whole expensive stack away.
Ah, so the amount of testing just skyrockets.
It goes up exponentially. And here's the trick. Here's where Tokyo Seimitsu wins. To make those stacks, the individual wafers have to be ground down until they're incredibly thin, paper thin, and very fragile.
And if you poke a fragile wafer with a clumsy machine,
You crack it, game over. Tokyo Seimitsu's specialty is handling these thin, fragile wafers. Their probers can move them, test them, and not break them. That's their edge right now.
And they've been building out capacity for this, right? The new Hanno factory.
They have. They saw this HBM wave coming and built the factory to catch it.
So the semiconductor side is firing on all cylinders, thanks to AI. But where are these machines actually going? The geography here is a risk factor.
It is. They're heavily exposed to 2 places, Taiwan and China.
And China's the big one. It's the
Yeah.
double-edged sword. With all the US and Japanese export restrictions, how are they even managing that?
It's tricky, but you have to remember most of the really tough sanctions are on the front-end equipment, the lithography stuff. Tokyo Seimitsu is mostly in the back end, testing, grinding, packaging.
So the rules are a bit looser there.
Historically, yes, they've been a bit insulated, and China is buying tons of equipment for what we call mature nodes, chips for cars, washing machines, that sort of thing.
But that could change on a dime, right? Geopolitically.
Oh, absolutely. It's a massive overhang. That door could slam shut tomorrow.
And then there's the other macro risk, the yen. It's February 2026. The Bank of Japan has been hiking. The Fed is cutting. The yen is getting stronger.
Which is the classic nightmare for a Japanese exporter.
So how much is that currency headwind hurting them?
It is a headwind, for sure. But the demand for these AI tools right now is so strong, it's almost inelastic.
Meaning the customers will pay whatever it takes.
Pretty much. If you need to ship HBM, you need the prober. The volume growth is, for now, more than making up for the currency losses, but it is squeezing their margins.
Okay, let's pivot back to the other half of the company, the metrology business. This is where that species change idea gets really interesting.
Right. The old business of measuring engine parts.
Which is a business in structural decline. No pistons in an EV. So, is that division just slowly dying?
You'd think so, right? But they did something really smart, something kind of counterintuitive. They bought their way into the replacement market.
That Fujitsu acquisition.
Exactly. They bought a Fujitsu subsidiary and renamed it ACCRETECH Power Trough System.
What does that division actually do?
It's simple, really. Charge-discharge testing for batteries.
So they went from measuring the physical shape of steel to measuring the flow of electricity.
They did. They're trading measuring geometry for measuring capacity, and it's not a tiny business anymore. It's about 10% of their measurement sales.
And the angle there is their existing relationships with the car companies.
That's a huge part of it. If you've trusted ACCRETECH to measure your engines for 40 years, you're probably going to trust them to test your new batteries. They're leveraging those old relationships to sell a totally new product.
It's a great play. Are there any other hidden bright spots on the measurement side?
There is one other interesting niche: wind power.
Wind power. That feels like a random jump.
I know, but think about it. The bearings in a giant offshore wind turbine are enormous. We're talking meters in diameter.
Okay.
But if that massive bearing isn't perfectly round, down to the micron, the whole turbine vibrates itself to death. And fixing one of those things out in the ocean is a nightmare.
So you need incredible precision, just on a massive scale.
Precisely. And Tokyo Seimitsu makes one of the only machines in the world that can do that. It's a tiny, high-margin moat.
So bringing it all together, AI chips, batteries, and wind turbines. Let's talk about the management. How are they treating shareholders through all of this?
You know, this has been a really positive change. They've moved away from that old Japanese corporate habit of just hoarding cash.
I saw they have an actual ROE target now.
They do. 15% or higher.
Which, for a Japanese manufacturer, is ambitious.
Very ambitious. And they're using all the tools to get there. Share buybacks, And importantly, share cancellations. They're actually destroying the shares they buy back.
which boosts EPS for everyone else.
Correct. But the other thing I found interesting was their language. They've stopped calling personnel expenses costs. Now they call them human capital investments.
Which is usually just corporate jargon for we gave raises.
It is, but in their case, I actually think it's meaningful. The IP for these HBM probers is all in their engineers' heads. If those people leave, the business is in trouble.
So paying them more isn't a cost, it's protecting the moat.
That's how they see it. You need the best engineers to make the best products to get a 15% ROE. The wage hikes are an input, not a drain.
It really does sound like they're checking all the boxes. So where are the risks? What could go wrong here?
The risk is the cycle itself, the semiconductor supercycle. We're all assuming this AI boom just goes on forever.
And they never do.
They never do. They boom and then they bust hard. So the question is, what happens in, say, 2027 if the big cloud companies decide they have enough AI servers for a while?
And the orders for probers just dry up.
Exactly. And that brings you right back to that other pillar, the battery business.
Which is only 10% of that segment right now.
So it's not big enough yet to save them if the chip market crashes. It's a race against time. They're using the AI cash cow to fund the green energy transition.
And they need the timing to be perfect.
The timing has to be perfect.
It's just a fascinating story of a company that has survived by constantly changing what it measures.
That species change is real. They didn't get stuck making one thing. They realized their skill wasn't in measuring engines, it was in precision.
If you can't measure it, you can't make it, whether that's an engine or a GPU.
Exactly.
Okay, so here's the thought I want to leave everyone with. We look at Tokyo Seimitsu today, and the story looks great. The stock is performing, AI orders are booming.
The chart looks fantastic.
But think about this. With the yen getting stronger and the China risk always bubbling under the surface, is their new battery measurement business a genuinely strong second pillar for the future? Or is it just a nice story to tell us while they cash in on what could be a temporary AI chip boom?
Are they truly diversified? Or are they just in the right place at the right time for this one cycle?
I think the answer will be in the growth rate of that battery division over the next few quarters. That's the number to watch.
I agree. That's the one I'll be watching.
Well, that wraps up our deep dive on Tokyo Seimitsu. If you enjoyed this, please subscribe. We'll be back next week with another look inside the Japanese market.
Thanks for tuning in.
This has been the Japan Stock Podcast. We'll see you next time.